Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope everybody's doing great. Last week we did finally start to fail at the major inverse head and shoulders breakout, which I said on day one, tweeted out that I thought this was going to fail. And with this came the break of the 2-week consolidation in the S&P 500, where opportunities were drying up as we saw risk assets just consolidating in the US. But with this sell-off, this now sets the stage for risk off this week. Okay, so a quick look at the economic calendar, because it's this piece of data we have to pay attention to from last week. The PCE price index and core PCE price index, Jerome Powell's preferred measure of inflation, and it came out hotter than expected. Now, why is this significant? Because as inflation rears its head once again in the US and we start to see a bounce in inflation, this is sending bond yields higher. And it's tightening financial conditions. The bond market themselves, the yields are tightening financial conditions as they rise and anticipate a higher terminal rate in the US. And what this is doing, this is now bringing risk off into play as the dollar rallies, as we get that failed breakout and further declines in the S&P 500. So when we look at the Forex pairs, it is those risk off setups which I'm going to be favoring next week. And if we have a quick look at the upcoming data, there is really nothing that we have to pay too much attention to. We do have the new governor speaking out of Japan on Tuesday. That can bring some volatility. However, apart from that, there's nothing we need to plan trades around. ISM data is important, of course, but nothing we need to plan trades around for next week. So we have a pretty clear run at the markets next week. So if we have a look at the scorecards for the coming week for the major currencies, you can see that there are no currencies below -2 or above 2. So we are still in that kind of transition phase, but it does now look like opportunities are going to start to come back into the markets with what we discussed happening in the S&P 500 and risk off coming into play. And what is very apparent in the scorecards this week is that the commodity currencies are now pulling down at the negative side of the scorecards, and we have the dollar, the euro, and the pound, where although the pound and the euro are not really risk off currencies, because you will see the euro and the pound decline against the dollar, against the franc, against the yen in real risk off, we are still seeing those kind of currencies projected to outperform the Australian dollar, the Canadian dollar, and the New Zealand dollar. So what I'm going to be focused on next week is those risk off currency pairs, which we're going to be looking at primarily pound New Zealand to the upside, pound CAD to the upside, pound Aussie to the upside. All of those three will rally in a risk off environment. Euro New Zealand to the upside, Euro CAD to the upside, Euro Aussie to the upside. And also we're going to be looking at Aussie dollar to the downside, US dollar CAD to the upside, and New Zealand dollar to the downside. Those are the main Forex pairs that I'm going to be favoring next week. Okay, so let's have a look at the individual currencies before moving on to the watch list down here for the coming week. And the dollar, as you can see, is rallying, finished the week strong. We're back above the 2-year and the 7-year breakout. And going into next week, this does, and I did highlight this around this time, that this market is likely to bottom. However, we may actually get next week a little bit of consolidation. We're starting a new month. So I would not be surprised to see just next week if the dollar did consolidate or correct, or even just move sideways. Now, if it does do that, and you still have the New Zealand, the Aussie, and the CAD weaker or selling off stronger, you will still see New Zealand dollar down, Aussie dollar down, US dollar CAD higher, etc. But going into next week, I am fairly bullish on the dollar, and I do think we've probably seen a bottom now in the dollar index as inflation starts to rear its head again and we get the terminal rate going higher and bond yields going higher as well. Next is the euro. So inverse really what we just looked at in the dollar, and I do believe the euro is coming back down to the lows like a number of these other currencies, and the dollar is likely going to be making its way back towards the highs. And the euro has now failed above this major breakout level which we've had in here previously, and it's very likely now making its way down to the major breakout level of the 1.03750. It will probably come down, test it, sort of consolidate, and then I imagine we're going to get the break and start the next leg down. So I am bearish on the euro vis-a-vis the dollar. However, I do expect the euro still to outperform the commodity currencies if we continue to get dollar strength and further risk off as US assets decline. So even if the euro comes down, again, if the New Zealand, the Aussie and the CAD come down faster, you will see Euro New Zealand higher, Euro Aussie higher and EurCad higher. And that is what tends to happen in risk off. They sell off together, but the euro doesn't sell off as much as the commodity currencies. Next is the pound. Now the pound is actually one of the stronger currencies in the scorecards, and although I still think that this double top does result in the pound coming back down to the lows, and we are setting up a major break of the double top down here, as it currently stands, the pound is just kind of moving sideways, and I do favor, just like the euro, even if the pound comes down as the dollar continues higher, I expect the pound to outperform the commodity currencies here. Next is the Swiss franc. Now the Swiss franc is an interesting one because for me, I am looking for the Swiss franc to go higher this year, primarily on risk off, but it has started to break down below the major double bottom here, and that is something that makes me question this kind of breakout. It has not yet failed as it currently stands because this is such a big breakout. This could very well, reverse over the next couple of days, and then we're just basically testing a range here on top of this major breakout of the double bottom here. So it remains to be seen how this is going to react next week, but this is something to pay attention to. And because this market is right at an area where it can go either way, either fail the major breakout or, as I said, reverse in a day or two and start the next leg up. I do think Swiss franc pairs are probably best left alone next week, and I'll be coming back to this maybe the week after. If we do get risk off though, I would expect the Swiss franc to do quite well, and so I would favor probably a bounce in this area on balance out of those two options between failing and holding this and starting to bounce higher. Next is the yen. Now, I did highlight the fact that the Japanese yen is likely coming back down to the lows, and this is as the BOJ fires up the printing press to defend their yield curve control program at 0.5%. And as we start to get inflation coming up high in the dollar, this is going to lead to flows out of the yen into the dollar, and it's a repeat of what we saw in 2022. And so I am still bearish on the yen overall. However, vis-a-vis the other currencies, it's not something which is set really to outperform or underperform. It is, as I said, those commodity currencies that I favor to the short side. Next is the Canadian dollar. I have been highlighting this just as a big bear flag, and I do expect this to come back to the lows, as I've been saying for a number of weeks. I was looking for this to come up and take out this high, and that would be the A, B, and the C. However, it looks like we're starting to fail before coming up and taking out the high. I am bearish on the Canadian dollar, and I do think pound CAD, euro CAD, US dollar CAD, especially next week to the upside, could be good markets, and they are on my watch list for next week. Next is the Aussie. Now, the Aussie was actually rated as quite good to the upside last week. However, we saw a reversal in the scorecards, and we also saw quite a strong sell-off here. So going into next week, the Aussie is actually one of my favorite shorts. And as the dollar rallies and the euro, the pound, even the Swiss franc, the yen, the CAD, as all of these come down and the dollar rallies, it is the Aussie and the New Zealand that I would expect to sell off the hardest. And that's why going into next week, these are my two favorite shorts in all of these markets here. As I've been highlighting for a while, I do believe the Aussie is coming back down to the lows, and this head and shoulders breakout now confirmed below here, this is now the sign that we are making our way back down towards the lows in the near future. And finally, the New Zealand dollar. I have been really since the beginning of the year warning that this is very, very overdone, and whether we take out the previous high or not, this is now running out of essentially road to the upside, and this is going to reverse to the downside at some point, and I believe we're coming back down to the lows. So again, we have actually broken a major double top here because we came up, we wicked these highs, and this is the confirmation point of the double top. Could we bounce and pull back a little bit next week? If we do, that's going to be the opportunity to short New Zealand. It's not going to come all the way down to the lows next week, but I do believe the journey to the lows has now started, and I am really focused on these New Zealand and Aussie shorts starting from next week. Okay, so looking at the watch list this week, starting with crude oil, as I always do, because crude oil is in here every single week. However, I have had a fairly neutral bias on crude oil ever since it bottomed in the commodity scorecards, and it has just kind of ranged. I do have a bearish to neutral bias, so on balance, I favor shorts in crude oil next week, but I do not have a high conviction in this market as it currently stands. I do prefer these 6 markets highlighted in gold, as well as silver shorts going into next week. So any pullback in this market, I would be looking for an opportunity to sell. And if you do get hold of a short and it starts to come down, it would be around this area here. I would say this low, right in the middle of this target area, where would probably be my max profit taking target. Because once you start to go past this area and you start to break below this target area, the odds turn against you for further downside, and you can see these markets actually reverse. Okay, so the first Forex pair on my watch list is Pound New Zealand. Based on the scorecards, as I said, New Zealand and Aussie shorts, especially versus some of those either safe haven assets or just the G10 like the pound, the euro, etc. Those kind of risk off setups are my favorite markets going into next week. So any pullback in this market is simply viewed as an opportunity to buy. And I'm going to be looking up towards the target area roughly of the 1.960. Next is Pound Aussie, so the second of my 6 favorite markets, well 7 if you include silver, but 6 favorite Forex markets next week. And you can see the pound versus the Aussie is driving higher. What I like about this market is we have this previous high right in the target area. So this is where I'd be aiming for a profit target. Any pullback in this market is viewed as an opportunity, especially if we come down and we start to form this kind of sideways pattern, is an opportunity to look for longs. I'm going to be looking up towards the target area here. And this high, as I said, really you could take as the perfect target within this target area. Next is Pound CAD. Now I do prefer New Zealand Aussie shorts versus the CAD, but this is a market on my watch list. I'll be looking for potential long opportunities. Any pullback, I do think that offers a good opportunity to start to look for longs into the previous high, which sits right in this target area here, roughly of the 1.64 to the 1.6450. Next is Euro New Zealand. This is the third of my top 6 Forex pairs going into next week on the watch list here. And the target area really for this is at the 1.730. Any pullback, especially if we come down, we test the lows and we start to fail down here, this is going to be viewed as an opportunity to look for longs into that 1.730 target area. Next is Euro Aussie. Now I do really like this market going into next week because we have just confirmed an inverse head and shoulders breakout above this high. And we've broken with momentum. I mean, look at the previous consolidation, and then you get that momentum break. Momentum precedes price. So this major breakout, sure, we probably get some consolidation, but that is simply viewed as an opportunity next week to look for long plays into the 1.5850 area. And you can see this high sits right in this area. That would be a great point at which to book profits in any longs that you're looking to take on a short-term basis next week. Next is EurCad. Now you can see here with the euro pairs that the price action here just in EurCad versus the other euro pairs is not quite as good. You know, Euro Aussie, we're breaking that inverse head and shoulders and we're breaking with momentum. EurCad, we have this big momentum to the downside and we're kind of consolidating. We're not even above the previous high. So it is on the watch list for potential longs based on the scorecard data and as a market that would outperform in risk off. However, I prefer Euro Aussie, Euro New Zealand, just as I prefer Pound Aussie, Pound New Zealand instead of Pound CAD. But any pullback in this market, I would be looking for a break higher potentially and into, let's say, the 1.45 area. And a retest probably of this low over here in the 4 hours. You see how it broke out? This kind of left shoulder high, lower high breaks out. I would not be surprised to see this come back and retest this, which is right in this target zone. Okay, so moving on to the dollar pairs, starting with euro dollar because we look at euro dollar every week. So I don't have a very strong bias in euro dollar currently, and that's why it's not highlighted in gold. However, I do favor further declines based on everything we've looked at, and the scores themselves are actually showing the euro and the dollar as being quite strong. When you get that, you can actually get consolidation. So I wouldn't be surprised even just to see this correct next week away from the target. But then overall, I would be looking for this to come down further. And if we get into the 1.04 to the 1.050 area, this is where the odds start to turn against you for further declines in this market. So I do favor New Zealand dollar and Aussie dollar, shorting those, even US dollar CAD to the upside next week over euro dollar. But on balance, I do favor further declines in the near future in euro dollar. Okay, so New Zealand dollar is the 5th of my top top 6 Forex markets on my watch list next week. And look at the difference between this and euro dollar. You can see this has a really nice pattern, this consolidation, coiling, and then we get a breakout with momentum. I'm looking for a pullback in this area, this kind of bear flag, probably a retest of the underside of this consolidation. That would be a great opportunity to start to look for shorts. And if we get down to the 0.6050 area, this is where you kind of have a max profit taking opportunity, because below here, the odds start to turn against you for further declines. Next is Aussie dollar. This is my 6th favorite of the top 6 on the watch list next week. And any pullback in this market, similar to New Zealand dollar, you can see here's a low. We kind of tried to bounce, and then we failed with momentum. Momentum precedes price. So any pullback in this, I would be viewing as a bear flag and an opportunity to look for shorts down towards 0.66 area. And of course, once we get into here, the odds start to turn against you, further declines below here. And the final Forex market on my watch list next week is US dollar CAD. We have broken out of this consolidation again with momentum. Any pullback in this area is viewed as an opportunity to look for bullish setups. I'm going to be looking up towards the 1.3750 area. Okay, so wrapping up the video with gold, silver, and Bitcoin, as we always do. And it is actually silver, which is my favorite short out of these 3, but I do favor shorts in all of them. And if you look at the gold-silver ratio, you can see a big breakout. And this is really indicative of strength in gold versus silver. And that is why, one of the reasons why, that I prefer those silver shorts heading into next week over gold and even Bitcoin shorts. Okay, so next up here is gold, and you can see we are starting to break out of this kind of descending triangle pattern. So as we start to break lower, we get some momentum. Any pullback in this market is viewed next week as the opportunity just to look for a short down to the 1775 area roughly. Next up is silver. Now silver did come and take out the target area last week, and you can see it did not surpass this target area. That was the max profit taking opportunity in silver last week. Coming into this week, alongside these 6 markets, this is my final favorite, the top markets out of this watch list that I like. Really nice sell-off to the downside, again, with momentum. So any correction or consolidation is viewed as a great opportunity to look for shorts, roughly down to the 20 handle. And last but not least, Bitcoin. I do have a bearish bias now on Bitcoin. And as you can see, we did trade into the previous high over here and failed. And we failed at the previous high over here. And I did tweet out recently that right up in this area, in fact, the NzdUsd in the global indices scorecard data, which we run every single day, did in fact top out, and Bitcoin is correlated to the NzdUsd. It peaked in the scorecards, and this has started to sell off ever since. So going into next week, I do favor shorts as we start to see risk off coming into markets. Any pullback in Bitcoin is viewed as an opportunity to look for shorts down to roughly the 21.250 area, but this low right here is the target I would be looking for any short-term trades in Bitcoin next week. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment, where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.